Good morning. This is Brad Dennis with BIS Commodities with your weekly market wrap-up. This is the wrap-up for the first week of August, August 1st through the 5th. First, let's look over at grains, and we see that corn closed, and I'm talking December corn, closed under 340 for the week, 333, down about a dime on the week. Right now we still have corn range trading with a bias to the downside. You've got a big crop out there, and that's what everybody's looking at. They're concentrating on the supply side, whereas on the demand side, we just haven't seen it perk up to the areas that would cause more support. Next week we get a supply and demand report out. That way we're going to see what the government thinks about the crop, what they think about the size of the crop. Then we can start debating about the demand side. One of the reasons why demand hasn't really picked up right now is people are looking at that balance sheet and they're looking at the amount of ethanol production. While it is a good amount, we're churning out more ethanol with fewer bushels. So they're thinking that that's basically that demand, that ethanol demand might be reduced some, and that could go to the exports to kind of even out the demand side. So big crop, you're debating yield. We're going to see what the government says next week on on Friday. And then after we get past that, maybe we can see what happens, big demand. And we might not see anything on the demand side until we turn the calendar year as well. So we'll see how that plays out. In the beans, the same scenario where you've got the focus right now on supply. Beans, I believe, were down almost 30 cents on the week. Last week we had 10.06 was our high in November's. This week $10. We continue to make lower lows, so lower lows, lower highs on the bean side of the market. A couple things looking at the bean market. First of all, we're seeing some fund liquidation. We took out our 200-day or long-term moving average this week, and that caused some length to come out of the market. Second of all, we're looking at better good to excellent ratings out there. Everybody was thinking lower to steady on the good to excellent out of the USDA. It went up one. So that puts a little bit of the idea that, hey, we are going to be over that 46.7 with the government. It's just how high are we going to be? One analyst came out with 47.7 today. Only time will tell on that one. The other thing that you got to kind of remember, too, is over the last month, everybody's been harking on, once we get to August, we're going to have hot, dry weather. La Nina is going to come in. And there was a lot of premium added to bean prices due to those thoughts. Well, we're into August now. We know what the outlook looks like, and it's not threatening weather, so the crop should finish off fine. Granted, we're not sure exactly how big the yield is, but it does look like we are going to have a big crop on the bean side as well. Over in wheat, wheat has made it through harvest more or less. And what we're looking at now is, can we continue to press wheat to the downside? Yes, there's issues with quality in France, but you also have a crop that's coming out of the Ukraine or Russia that's going to be able to make up for that. Here in the U.S., 430 on the December wheat, that has held to a certain degree. What you need to see is you need to see the funds that are short wheat have some kind of cause or something to come out to cause them to cover that short position, and that would be, that would propel wheat to the upside. It's going to be tough to do with corn kind of continuing to slide down, but that would be the one reason to get wheat maybe back up to that 460, 475 area on a short covering rally. Over in the energies, we saw crude make its way down below $40 in the near term or in the September contract, and then we bounced off of that midweek. The whole bounce was due to a big drawdown in gasoline stocks. So that propelled gas. Gas pulled up the crude oil market. Everybody was kind of wondering if we're going to trade this 40 to 50 area. We did see rigs come offline today, so with those two things coming in there, maybe we will have, instead of this continual downslide in crude as of late, maybe we'll see a little bit of bottoming here around that $40 area. The interesting thing about crude this week has been how it's been so detached from the dollar. Dollar's been moving around and dollar's been down, and typically you see a big crude rally after that, but that was not the case. We had many days where we had the dollar down and crude down. So its detachment from that currency trade is very interesting. Now, towards the end of the week, we did finish the dollar off strong. Two things went into that. First of all, you had the Bank of England come in this week. They cut their rates by 25 basis points, added stimulus to the economy. There's going to be quantitative easing over there too. So they're trying to inject a lot of liquidity into that economy and boost things up. And as they lower rates, well, even though we're not raising rates in the U.S. here, you're still seeing the dollar be solid out there. So that's the cause for the dollar rally. Also, we had a good jobs number today. I mean, 4.9% unemployment. That's still under 5%, which is a good number, great number. And then we had non-farm payrolls come in at 255,000. You look at that 255,000 number, and you look at the revisions that were made ahead of it. What was it? Last month's was revised up 5,000 to about 292, and then that really that terrible month was revised up as well. So these upwardly revisions are giving a little more confidence to the economy. The other thing that I'd point out is that our hourly earnings and the work week both increased. So if we can get that rolling a little bit, that's what the Fed really wants to look at is there wage inflation out there, and if we start seeing that come into the economy, that could cook things up a little bit, which would be actually helpful from the levels that we're at. It's just basically you look at global trading, but you still have the U.S. economy, and the U.S. economy is not nearly as bad as some of these others around the world. Look at Japan, and they've just tried to throw everything at that economy, and it just stagnates, and we just don't want to run into that here in the U.S. Last but not least, the livestock trade. Not a whole lot to talk about over there. You had a higher cash trade this week, and we saw the board raise as well. Looks like they got their needs met early in the week, so next week, as far as looking for cattle, probably they probably won't have that big appetite for it. We did see some technical closes today. We had the October contract finally close over its 100-day moving average, so that's going to be the question next week. All right, so we closed over the 100-day moving average. Does that bring in some money into this market to start doing some technical adjustments to the upside? We'll have to see. I would expect steady cash next week unless we do have some technical buyers come into the market. As far as on the cash side as well, good numbers for the week on the slaughter numbers. The problem is, though, that we're still putting a couple more pounds, so those slaughter weights are still up there. So we've got to thin them out a little bit, and maybe then you can see that objective of a 125 in the December come true. We still have to thin things out a little bit. So. But that is a wrap-up for the first week of August. I'm Brad Dennis with BIS Commodities. If you have questions about anything, please give us a call here in the office, 1-800-373-2525. End of broadcast.